Wedbush, a star analyst. Dan Ives joins us now at Post 9. It's good to have you here.
Good to be here.
All right, so here's the situation, okay? I got two things going on. I've got Dan Ives, right, the star analyst that we say, suggesting that this stock is still underappreciated as an opportunity, that it's an outperform. But then I got the company's CEO himself, Satya Nadella, who a couple of weeks ago said the next 2 years are going to be tough. So Ives has an outperform. Nadella's got a hold. Why should I listen to Ives and not Nadella?
Yeah, and Nadella, obviously a Hall of Fame CEO, and it's part of, our bullish thesis on Microsoft. Because I think right now, we're clearly going to see some deceleration in cloud come off of 50, 60% growth. I mean, what's interesting to me in terms of all of our checks over the last week, we're only seeing about 6 to 7% of deals really push or get downsized. And if I look at last quarter, that was 3 to 4%. Overall, this is less than 50% penetrated in terms of the cloud opportunity. And Scott, in my view, this becomes more and more of a cloud play, less of a PC, call it non-cloud, as we go into next year. And I view this as what I believe going into earnings is a significant risk-reward higher.
The reason, look, investors have agreed with you. They've said it's a cloud play for Azure, by virtue of the fact that they were willing to pay a high premium valuation to the market for this whole time. But now Azure growth is slowing. So why should I pay anywhere close to a multiple that I was paying before? And now I know the multiples come in, but it's still, you could say, expensive relative to where the market is.
Sure, and it's a great debate. I mean, my view is that if this is ultimately Azure growth that we could see above 30% in a low single-digit IT spending environment, for what I believe ultimately is still, if you look at the average Microsoft install base, we're still, call it 4 of every 10 have still significantly moved to the cloud. Most of the opportunity is ahead, not behind. And also, look, this is a company that's going to get more and more aggressive. Look at OpenAI, look at more of these aggressive bets, you look at Activision. It's not a company that right now is going into the right lane.
No, but, when the CEO himself said what he did, you weren't moved by that at all?
Yeah, look, Nadella is a tactician, the gold standard, in my opinion. And what I think he's doing, which is important, lay the groundwork for a tougher environment for the next few years.
2 years.
But in Redmond, in the walls of Redmond, this is not a company that's acting defensive. So Nadella's talking about that, but ultimately, in terms of the playbook, they're going on the offensive, not just in terms of M&A, but I believe this is a company that, from a cloud perspective, is going to gain more and more share versus Amazon and versus, some of the competitors.
What about this, said $10 billion investment that we're talking about?
I love it. It's a smart, strategic poker move because, in my opinion, you go back to the late 90s. Look at Gates' biggest regret. Antitrust, obviously an uncertain macro, they ultimately peel back. Here, you want to go aggressive in what I believe is probably one of the best, most innovative AI technologies out there. They've already invested in it. Take a step back right now. I believe AI, in terms of the best AI play, is Nadella, is Microsoft, is Redmond.
So do you think that, and we referenced this some 43 or 44 almost minutes ago, about the laggards of 22 emerging, at least at the beginning of 2023, as some of the winners? Do you think that's legit for some of the companies like a Microsoft, a Salesforce, for example, losers that are winners right now? Does that have some kind of staying power? Is that just a mean reversion, short-lived? What's your view?
I think it's a great point in terms of the enterprise, because I think when it looks at enterprise cloud, that right now is what I believe is going to be a lot more resilient in this IT spending environment. I can tell you, talking to investors every day, especially in 2023, everyone's like, okay, where's the numbers where I could stress test? Numbers could come down, but a lot's baked into valuation where I believe the growth is going to be. Consumer, digital, some of these other areas, you could definitely have another leg down. That's why, I think in terms of what's happened at Microsoft, look at Salesforce and Benioff. Those are two of our top picks. I believe risk-reward compelling here.
Tom Lee yesterday, I think it was yesterday, told me sitting where you are that he thinks FANG could be up 50% this year. 50. I near fell out my chair. Is that something on your radar, too? Like, are we going to have a big bounce back for FANG?
I think it's going to be a massive bounce back. And we've talked about tech stocks overall up 20% and big tech up above that, because it's my view that fundamentals are going to hold up better than being baked in. Whisper numbers are right now 10 to 15% below the street. And you look, if you look at overall tech, I believe right now it's as under-owned as I've seen tech, going back to 2009 and maybe 2002.
You better hope earnings are going to be decent, not just the numbers, which probably will be, but the commentary. What if the commentary is dour like Nadella was?
Yeah, so I think you got to put it in almost bracket. If it's just downright disaster, horrific, okay, that's not baked into a lot of these names. They cut guidance 15, 20%. But right now, you start to have some sort of modest expectations with some darkening, and obviously FX continues to play an issue. Then I believe we sit here in early to mid-February being like, big tech bounds 15% through earnings. Why? Numbers weren't even that great in terms of guidance. Better than feared. And that's really, in our opinion, the setup here.